we take all these pictures, and here's one of the gifts. People send me the pictures they took of me and them. It's part of the treasures I have on the farm. Incredible. A picture's worth 1,000 words to describe the scene, the emotion, what happened. Say, wow, this was an extraordinary day for me when I met these people. Here's what they told me happened to them when they went to my seminar 10 years ago. Wow, the drama comes back if you've taken the pictures. It's one of the treasures to leave behind when you go. Remember the old photographs that we have now of, 100 years ago, 70, 80 years ago, just a few photographs? What would it be like if you had thousands of photographs of the past, of your history, your mother, your father, right? Grandparents? So change all of that now for your children. Leave all your photographs as a record. Here's what's next to leave behind, and that's your library. The books that changed your life, the books that changed your health, the books that rescued you from oblivion, the books that you passed on to other people, they were so exciting for you, the books that made you financially independent, the books that developed your leadership, the books that gave you wisdom to ponder when things were tough, the books that got you through the winter, the books that helped you to plant in the spring and harvest in the fall. What a treasure to leave behind. If you do that, here's what's for sure. Your books will be more valuable than your furniture.
Sweetie, some more friends are here.
We're here for Comes Up with a Healthy Brain.
Think and Grow Rich by Napoleon Hill. Think and Grow Rich. Shoaff said to me, doesn't that book and title intrigue you? Think and Grow Rich. Don't you have to read that book? Think and Grow Rich. I said, yes, sir. By Napoleon Hill. I went and found that book in a used bookstore. That's where I had to start. In a used bookstore. I paid less than 50 cents for it. I've still got it. It's one of the rare hardback covers. Think and Grow Rich by Napoleon Hill. Wow, Shoaff was right. Get a library started. It'll change your life. Any home over $200,000 has got a library. Why do you suppose that is? Wouldn't that make you curious? How come every home over $200,000 has got a library? Does that tell you something? Does that educate you at all? You say, well, I can't afford a $200,000 home. It doesn't matter what size home. Take your present apartment, clean out a closet, call it your library, and start acting intelligent. And start this process like I did. Start developing a library. Here's what your library needs to show, that you're a serious student of health and life, spirituality, culture, uniqueness, sophistication, economics, prosperity, productivity, sales, management, skills, values of all kinds. Let your library show you're a serious student. Don't be casual in learning. Don't be lazy in learning. Information is the key. Okay. Learning is the beginning of wealth. Learning is the beginning of health. Learning is the beginning of prosperity. Learning is the beginning of democracy, the beginning of freedom. All values, all virtues start with the learning process. So don't be lazy in learning. Don't be lazy in gathering the library that'll teach you and instruct you. And I got that book, Think and Grow Rich. Some of the ideas in that book inspired me no end, helped me to change my life. Now, it's got some weird stuff in it. It's got some weird stuff. Napoleon was weird, so you gotta separate out a little of this weird stuff. But you can do that. You can separate out the weird stuff, okay? Unless you're weird, just do the weird stuff. Anyway, remember, don't be a follower, be a student. That's the key to all books. Don't be a follower, be a student. Okay. Another book he recommended. Help me become financially independent. We're going to cover that before we finish this afternoon. The book was entitled The Richest Man in Babylon. The Richest Man in Babylon by George Clason, C-L-A-S-O-N. This little book, The Richest Man in Babylon, I use it as a textbook teaching teenagers how to be rich by 40, living in America. 35 if you're extra bright. Much sooner if you find a unique opportunity. I got rich by the time I was 31, didn't wait till 35. If you find a unique opportunity. So we'll get into that after we come back from our next break. Richest Man in Babylon. Get your library started. Here are some key sections to put in your library called mental food. In fact, we call it food for thought. It's so important to nourish the mind, not just the body, but nourish the mind. Key phrase. Now it needs to be well balanced. You can't live on mental candy. Somebody says, well, I just read this positive stuff. That's too second grade. You've got to get out of second grade. You can't just be inspired. You've got to be taught. You can't just be inspired. You've got to be educated. Key. Here's a good book. It's called How to Read a Book. Good title. How to Read a Book by Mortimer Adler. In this book, How to Read a Book, Mortimer, you know, is the chief editor of the new Encyclopedia Britannica. A good set of books, right, to have in your library. The Encyclopedia Britannica, chief editor, Mortimer Adler. He's in his 80s. He's still active, still writing books. I've got several of his books. The 6 Great Ideas, a lot of books. Mortimer Adler. But he wrote this book, How to Read a Book. Now, in this book, How to Read a Book, not only does he give you some good suggestions on how to get the most out of a book. It's one thing to read it, it's another thing to get the best out of it. He'll give you some techniques on how to get the best out of a book. It's very good. But here's what's also in his book, How to Read a Book, a list of what he calls the best writings ever written. The best writings ever written. I've used it as a centerpiece for my library. So I'm just asking you, take a look. If it suits you, fine. If it doesn't suit you, hey, keep looking until you find something to suit you. But well balanced.
Yo, what's good? What's good, everyone? Welcome to another episode here at the Market Mentorship Overview at your Inner Wealth YouTube channel. Thank you guys for tuning back in. Appreciate you guys for always being here and tuning back in week after week, you know, to grow and to listen to these biases that I'm sharing every single week on Tuesdays and Thursdays. Guys, a lot of objectives got hit this week, so let's go over what we shared on Tuesday and what followed through after, okay? So after we've seen those consecutive shorting weeks for these past 3 weeks, we anticipated a little bit more shorts, being that we were really close to the downside. Okay, we were mainly looking at previous weekly low. And precisely the price level that I mentioned on Twitter was based off this insufficiency here, and it was 101,900. And the low of this is, let's see, did we get to that? Oh, we just barely missed it right there. So you guys can kind of see that a little bit better right there. Yeah, we just barely missed that 900 level, but overall the shorts in previous weekly low did get hit from our daily insufficiency that we mentioned. So when we were here on Tuesday, this is all we had, all the data we had to offer. And so we did see some really nice shorts out of that area into the previous weekly low and this previous daily opening gap. Really nice shorts that came during that. So I was looking at this gap here. We didn't make it up there. Obviously, we just found support. We found resistance within this imbalance, which is nice. I like that area a lot. I really like that area here a lot. And I get asked a lot, like, Bash, how come you would look there and not like all the way up here where the previous area of distribution was, or at least 50% and above? But I don't know if you guys remember, when we were looking at this whole range, we were looking at 50% of this whole range and above to that like gap right there. And honestly, if it would have came, it would have still been valid in my eyes. And I would have still been looking for the shorts that we found either way. But you have to realize, until we hit a certain level of liquidity, we won't show that ideal rejection to the upside. So you want to see an impulsive move away from your area, not this. This is a struggle to pull away to the upside. So it's clear that these lows were more than likely being taken out just by looking at them. Okay, sometimes these areas will be respected, but it's very rare that these areas create the low lows. So as you guys can see, we did end up shorting off pretty nicely from there on Wednesday, I believe, right? Yeah, Wednesday. So we did have that nice shorting opportunity on Wednesday for when Federal Jerome Powell spoke. So over here you can see it a lot better. Give me a second. Go to the 1 hour, and here's that 10 a.m. candle that took out this internal liquidity. So when we were here on Tuesday, we mentioned one or two things we were looking for. Okay, it was either we were gonna create some intraday liquidity and then short to the lows, or we were gonna sweep that previous daily high one more time and then short lower. Now, guys, if you don't know what recording I'm talking about, you guys can review it. It is the Technical Tuesdays from, I'll give you the exact date. Technical Tuesdays on June 20th. Okay, we gave out all these levels, targets, and what may potentially happen during news. It wasn't like the highest impact news, but it still made a really nasty move to the downside today. I mean, on Wednesday. Yesterday for me. Let's kind of let that thing roll out. So these shorts was what really, for me, why the reason that I was looking for Dow longs. Okay, we had built up a lot of liquidity on Dow to the upside since, you know, Monday. Monday's a holiday, right? So we left Monday's high, we left Tuesday's high. So for me on Wednesday, I was looking for longs below the lows. And so once we actually got below this low here, below that low of the range, and we're looking at this whole range like this as a daily range. That's the low of last week, the one that took out all of this liquidity. Okay, and then that's the high that almost made it to some major highs, but in that doesn't mean it didn't take out major highs. It very much took out some major liquidity to the left. Okay, so with that, because we have two anchoring points of liquidity, just looking at this whole range, I was looking 50% and below, and just kind of looking at liquidity being built up right below here. And so once we took out this low, it's not just like price, right? It's time and price. Once we took out that low, it was really the 5 minute, really the 5 minute that created that push higher, right? So here you guys have a shift in liquidity right there. Okay, here on the 5 minute. Okay, so again, let's kind of walk it down so that way you guys aren't like kind of thrown off by this whole range. Okay, so again, DXY has been moving higher all week as Dow Jones has been moving lower. And because I anticipated DXY to short for the day of Wednesday, I wanted Dow Jones to long. Okay. And so news didn't take place till 10. So we're going to go to 10 a.m. Yeah, we're going to go to 10 a.m. on that day, on Tuesday at 5. Okay. And you can kind of see here as well, like the Asian highs were left all week. Monday's Asian high, Tuesday's Asian high, and Wednesday's Asian high as well. Okay. Obviously, you guys know what happened, but it's not about the hindsight that you're seeing. It's about what you learned from it. And so, as you guys can see here, okay, on the 5-minute, you get this really nice shift in structure. Okay, after that, you get a nice insufficiency. Okay, and that's basically where I've entered. Entered here. And just stop loss below the low. There's another confirmation that I had along with the imbalance. It wasn't just the imbalance. It was actually here on the 3-minute as well. I'll show you guys real quick. Yeah, it was just a high of this. You guys see this breaker here? Okay. So you guys can see that a lot better actually. Actually, you may be able to just see it on the 5-minute. No, you're not able to see it on the 5. So we're gonna keep that right there on the 3-minute here. Since you guys already know it's the 5-minute, that gave me the shift in structure. Cool. Then you have your breaker right here. Okay, a nice breaker. So you have imbalance, breaker, entry on the overlap, stop loss below the low of the imbalance, targeting Asian highs. There you have your setup. Okay, so really nice trade. All comes along with the bias from DXY. DXY was shorting, anticipated more DXY shorts. We did get, and we indeed got those DXY shorts hard, but it didn't relate very much or correlate very much to the indices. As you guys saw, I'm so sure most of you already backtested and did your own due diligence. It really didn't correlate too much that day with indices, as indices continued to plummet to the downside to previous daily lows. And you know, I think one of or two of them took out that previous weekly low as well. So right as we kept longing, we rejected to the downside and really just respected that 4-hour overall. So let's go back to that 4-hour here. Okay, really just respected that 4-hour overall. So we left that previous daily high. And one thing I wanted to do today is go long into previous daily highs or back into this previous area of distribution. Okay, now I didn't personally get the opportunity to go long, but I want to go over the longs that took place this morning. And the longs again are coming from a DXY short bias. Okay, and then the shorts came from this DXY long bias, because on the DXY on the 1 hour, after we took out that previous weekly low, we began accumulating. And you can kind of see this a lot better here. So on the 10 a.m., look at that. You have an imbalance. You have a breaker order block. Okay. And you can just see price action just explode the opposing direction from there. Okay. So now let's kind of review that on Dow. So around 10 a.m., that's when Dow started exploding to the downside. So we're gonna look at it a lot better here, but okay, we'll cut out the day and kind of leave it right there. Okay, boom. Cut out some more. And so I want to just point out these longs right here at the open. For anybody that did catch these longs at the open, and not even at the open, sorry. So after we took out the lows, this was really clean. Okay, after I don't trade before 10 a.m. or I try not to, at least. That's my goal, is to trade after 10 a.m. But you guys can see here after the open, I want to go into the smaller time frames because you guys can see this clear accumulation, takes out the low one more time, shifts shifts structure and pushes to the upside, and then leaves this clear insufficiency here that we come back to as a 5-minute. Okay, and not only that, we come back to this area here on the 5-minute, but it's also the previous weekly low. Okay, remember that previous weekly low liquidity sweep. Okay, which I'm going to take out. And also I want to point out this beautiful insufficiency here. Okay, it was this low to potentially, I want to say, this high right there. Nope. Right there. Okay, you can see that a lot better right here. It's a 1 hour insufficiency that has already been filled up. Oh, sorry. I don't know why that's not that color. Okay, there we go. You guys can kind of see that a lot better. Okay, so you have, again, let's go back to it. This is that previous weekly low. Oh, no, this is that previous weekly low. Never mind. This is that previous daily low. Okay. You have a 1 hour imbalance here that after 10 a.m., right? 9 a.m. Intraday liquidity. So I don't expect the 9 a.m. low to get taken out. It already did the run. Then we have this shift in structure that created this displacement to the upside. Okay, so you have the imbalance that was created before the manipulation or the displacement that created the lows. A 5-minute imbalance, 10 a.m., shift in structure, everything. Okay, everything to go long right in there. Stop loss below the low of the imbalance. Nice 1 to 3. You would have been done for the day right there within 15 minutes. Super clean trade. Super clean trade. That actually was not where I got in though. Okay, that isn't where I got in actually. So you guys will see it a little bit better here. So after we took out that Asian high, I wanted to see some rejection because I'll show you why. So we take out that high and it's about 1010 here. Okay, it's about 1010. And let's add the DXY on the bottom. Oh, Connor, there we go. Ah, shit. Give me 1 second. Let's make this the candle chart, and let's take all these other guys out for the time being, and we're just gonna look at DXY at this time. Okay, so DXY at this point. Okay, let's go look at it on a bigger time frame. So right as we hit Asian highs, okay, right as we were hitting Asian highs, DXY, why isn't this? 1 second. There we go. Look at this. DXY, remember that imbalance at 10 a.m. with the breaker? Okay. That imbalance with the breaker right there. Right at 10 a.m. when we hit the Asian high. Okay. So that is a good, pretty solid confirmation that we're going to push downwards. That it's a pretty good confluence, right? Those are correlating together. It doesn't have to explode. It doesn't have to be the move of the week. Okay. But if you can catch the XY correlating and supporting your bias, that's by all the means a great supporting confirmation. Okay, so now once that happened, I felt pretty confident about this 1 minute distribution that took place. Okay, because we were bearish on the daily, the 4 hour, the 1 hour. I believe the 1 hour is still, yep, the 1 hour is still bearish. Okay, because we were bearish on all time frames, I went to the 1 minute. I identified the last imbalance that we created before we moved up to the Asian highs, because I'm assuming that this was the manipulation. Okay, and assuming that this was the manipulation or part of the manipulation, I want to align myself with smart money. I want to align myself with these institutions. Okay, so if they are manipulating price to come higher, or price is being manipulated higher, then this insufficiency is created because of the, I guess, the buying I wouldn't say power, but I guess the selling deficiency. Okay, the deficiency of selling of the shorts was there, and so price created this big push up, right, where no selling was offered. So no selling power was offered here, no shorting power. And so price, because it was manipulated, we can see that clearly right before we went up to the Asian highs. So how do we know that institutions are in the moves? Because when they make the displacement, they leave that insufficiency. That's why not just any break of structure is gonna be it. It has to do or meet certain criteria. So really, I highlighted this imbalance because I wanted to see if we traded below that and traded back into it, I would go short. Okay, because not only did we create a distribution schematic, but we're creating insufficiencies to the downside here. So here's an imbalance there. We traded into the imbalance, found support. Okay, then we trade lower and close lower. At this point, this is the point where I'm personally looking. Okay, here on the 1 minute, this is where I'm personally looking to go short. Is at the next candle that taps into my imbalance. There is, actually, I think I went long on this one right here. I went long right here. Okay, with my stop loss above the high of the 1 minute imbalance over here to the left. Okay, remember, it's always the high that created that imbalance that swept liquidity. Okay, and then we started rejecting to the downside, and it didn't take long before I switched back over to the 5 minute, and the 5 minute provided this other insufficiency within my insufficiency. So what do you know? Okay, imbalance within the imbalance. Boom. So now I got my imbalance and then this 5 minute imbalance overlapping. So then when that overlap happens again, I'm going to pull it again right here. So this is where I personally went short for the second time. And then just kind of let price action do its thing after that. I was aiming for 34.80. Okay, down here. 34.80 level. And when we came into this gap, I had taken out, so I went in with about 4 or 5 contracts, and I only left one running after this hit. After this hit, I only left one running because my overall target was down here. And then price action just kind of rejected, and I really liked that reaction. Okay, I really liked that reaction, and so I just closed the entirety of it because I kind of figured that given this large range, we may, and that we already took out the lows, we may respect this low overall. So I just closed it. I was happy with my 1 to 4. I went 0.5% risk. I only risked, not even 0.5% risk. So I caught about 2% on that trade. Was hoping for Dow to go a little bit higher, but it's bearish for the whole week. Yeah, you know what? That's what got me, SJ. Actually, that's one of the things that got me is of course, like yesterday I was long, and I wasn't just going long to the Asian highs and then that's it. Like yesterday, or for the day with Jerome Powell had testified, I was anticipating longs to the high of the week. Like I was anticipating longs to previous weekly highs and everything, because the daily at that point could still had that chance that it could turn and remain bullish. Shit, sorry, I went way too far. Okay, and remain bullish. And so I was really, I guess, hopeful that we were gonna continue pushing to the upside from there. And so that also happened to me, bro. Like I was looking at that, we took out the lows, right? We took out that low, and so there I anticipated a rejection to the highs. So even on this one right here, the reason that today I went on that short, I closed most of my trade, was because yesterday I didn't close most of my trade. And, you know, I left quite a bit of percentage on the table on this long because I had so many objectives to the outside. So look, I hit like a 1 to 8 there, but I only secured about 2%. Because I left the majority of my position running to this gap right here. This is where I was going to close like everything, was at this blue box right here. Because I was overall aiming for that previous daily high, but I didn't want to hold for a crazy amount. I only look for like intraday liquidity levels for sure things and then just get the hell out. But this one, definitely, I anticipated this to be the low of the week and for us to continue pushing to the upside. Once this low was created again, that's when I was just like, you know what? We're more than likely, I accepted the fact that we're more than likely going to continue pushing to the downside given the 4-hour respected. So it was a huge downer for me as well, because my weekly objective was overall the high, okay? And, you know, obviously we didn't get that. My overall objective for NASDAQ was these lows right here. Did we hit the lows? Look, my objective for NASDAQ was this low right here. Look at that. We barely came short of that. What the fuck? By 1 point. Oh no, it's a couple points. No, it's a couple points for sure. But anyways, what I'm getting at is, yeah, my objectives got dodged this week for sure. Like on NAS was the only one that I was looking for shorts all week, and like it dodged that. If I would have just been on the charts or in a short, I would have been trying to hold that to the lows, you know, diamond hand it, and it would have definitely taken me out. So just kind of looking at price, like I mentioned earlier this week, this is a very large daily range for NASDAQ. Very large daily range. So we still have imbalance to the downside, 50% and below. We still have this previous area of accumulation. We still have a lot of liquidity to the downside. Do we have to go there now? Absolutely not. We can honestly create this imbalance, and I have this bias because I feel like we're gonna play within the range that we already have for the weekly. Excuse me. We're gonna play within the range that we already have for the weekly, because this imbalance here looks pretty nice. We don't have to hit these imbalances, but this imbalance right here gets my attention, and it goes across the board with S&P and not Dow, but S&P and NAS. So I like that correlation. I'm going to shoot for more longs next week. I'm not going to be trading tomorrow. I do think that tomorrow we may long. It may be the long that for the week that I've been waiting for all fucking week. But hey, I may not be. I can honestly tell you guys, I may not be a part of it. Okay. The longs on NASDAQ today made no fucking sense. I mean, DXY was longing Okay, we had that really nice long setup, so that's why we shorted on Dow. And you know, price action just on Dow did not want to short today, didn't want to short too hard. Okay, that's why I closed it prematurely on that one. And the Nasdaq shorts did not want to short, so everything was just kind of had a mind of its own. But honestly, how do we know that area is not valid anymore? You're going to have to ask me that one with a little bit more description. If you guys ever have questions, I would say like give me a pair and time, and then that way I can break it down a little bit easier, because most of the time there's a huge lag on YouTube. Like when you guys typed in the messages, I probably see them 5 minutes after you guys actually message it. So just letting you guys know that how like I don't see the messages, unfortunately, very live. It kind of has like a lag on it. So how do I usually how do I invalidate an area for, let's say, like for an entry point? One big part that one big part that helps me with invalidating areas is if the target gets hit first, you're done. Like if the target gets hit first, bro, like that's it, dunskies. All right, that one's a big one for me, a big one that helps me a lot. Oh, you thought that would respect the order block? Yeah, like I said, I was there with you on that for sure, bro. The longs on Tuesday just look very appetizing. The reason I shorted earlier today on today's session was because we kept respecting the shorts. The shorts struggled to smack the lows though, so we have a ton of liquidity to the downside. If I end up, I won't end up trading tomorrow, but the longs tomorrow may end up playing out. Like I will not be surprised if the longs tomorrow end up playing out after we take out this low right here. This low that for some reason we fail to take out almost every time. Yeah, that one right there. Previous weekly low. We're so close to it, we have yet to take it out. Okay, so we'll leave that there. Nasdaq. I haven't traded Nasdaq too much. It's been having a mind of its own. I'm not gonna lie to you guys. So I've been kind of deviating away from Nas. But my boy Nate, just kind of put him on. Shout out to you, Nate. I know you sometimes watch these recordings. Appreciate you, bro. My boy Nate is holding these shorts from up there. Super nasty short. I know he was holding it for these lows. I'm not sure if he ended up closing it out earlier or not. But yeah, guys, for now, for me at least, in terms of indices, I'm gonna need a little bit more data in terms of Nasdaq. Dow longs look good, guys. I'm not gonna lie to you. Dow longs and Nasdaq longs tomorrow look pretty solid to continue moving to the upside. You know, I will not be surprised if we just continue rocking it to the upside from these imbalances down here. And just continue rocking it to the upside. I won't be present in the market. I'll do my analysis and share with you guys on Twitter as always, but I won't do my I won't be active in the market trading, because honestly everything looks pretty appetizing to continue shooting to the upside. I just feel like liquidity is being built up right now. Like, look at all the upside liquidity we're building up, and look at all the downside liquidity we're building up. You gotta ask yourself all the time these questions: are we seeking liquidity? Are we running for liquidity? Or are we building liquidity? Okay, if we're seeking out liquidity, that means you're gonna take it out and reverse. Like, you're looking for the price action to do that. If we're gonna run for liquidity, it's kind of what we've been doing this week. So when we open and we just keep running for lows, running for lows, running for lows, running for lows, just continuation. If we're looking to build up liquidity, we're gonna be dodging liquidity. and go and moving price action very healthy. Mitigation, 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 mitigation. Because you guys tell me what on this 4 hour, where do you guys see an imbalance here? Probably just right there, that one. But look at price action. Healthy, 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 healthy. Back and forth, back and forth, back and forth, back and forth. Why do you guys think that is? Right? We're either building up liquidity, seeking out liquidity, or running for liquidity. Or maybe 2 out of the 3. Right? And you have to identify what phase you're in. Because, yeah, this building up liquidity phase, I'm not going to be holding these trades much longer. I thought we were going to get out of this liquidity build-up phase, but we haven't yet. Right? That's where I thought on Jerome Powell's day we were going to go long, hard. Because DXY just dumped. But indices have another objective. So what we're going to do, guys, something we're going to do is I'm probably going to be doing my technical Tuesdays a lot earlier, just because on Tuesday night a lot of price action has already developed, and Tuesday mornings is kind of my favorite time to do my analysis for the week and really get a feeling of the market. So we'll keep working on this together and everything, but we may change technical Tuesdays from a night call to a New York session call, right? Where we're not only like trading live, but we're also giving like a whole weekly outlook within this live trading session. Drop some 8s in the chat if that sounds like something that sounds like a good plan for future plans on technical Tuesdays moving forward. And that is definitely something we'll start implementing. You know, Monday our live trading sessions that are scheduled, and then Tuesday we can start doing technical Tuesdays a little bit later in the morning, but it will definitely a little later in the morning, but it will definitely be during New York session. Okay, so let me know if that sounds awesome. Cool. Let me see some 8s. Got 4 8s. We got cool guys. Now guys, before I hop off, just want to give you guys gratitude for being here as always. And I want to ask you guys, you know, one favor from you. If you can share this call, this playlist, or this channel, whatever it may be, a video, this link to this channel, whatever it may be, to maybe you're in a group chat, maybe you're another individual. If you can just share this with one other individual, that would help the channel tremendously. The goal for this channel is for us to, before the end of 2023, for us to reach 2,000 subscribers. Okay, that is my goal for Inner Wealth YouTube channel, is to reach 2,000 subscribers and 50 to 100 on a live stream. Okay, help me reach out as many people. I want to not only give you guys breakthroughs, but give more individuals great breakthroughs, provide more value, because not only does it help me to see you guys tuning in time after time, but it's really encouraging to continue to pump out content, and it would really help the channel and the business to continue to flow and grow. And you know, the more value the business is able to bring, the more value it's able to provide as well. So guys, with that, I appreciate your guys' love and support and the time that you guys give this channel and all my lectures. It means the world to me. I will catch you guys tomorrow. If Matthew does the New York session, I'll definitely hop on with him for Abundant Capital. If not, I will see you guys for sure on Monday morning's New York live trading session here at the Inner Wealth YouTube channel. All right, guys, take care and have an amazing rest of your week. Peace.